Mixed messages. That's our topic for today's Backstage Pass. Happy Thursday, everybody. Hope you're having a great day so far today. Mortgage bonds and stocks are down so far today. Mortgage rates opened up higher today than where they closed yesterday. We'll talk more about that in just a minute, but first let's talk about the handful of items and news and events that have happened today. Number one, the White House has announced that it was able to strike a deal with railway workers to avert a strike by those railway workers. And this is a big deal. We talked about it a little bit yesterday. The implications are about 100,000 workers were going to walk off of the job. It would have cost the economy about $2 billion a day. That's an estimate. And really would have put some pressure on supply chains and ultimately on inflation, some upward pressure on inflation. So good news coming out of the White House and out of the railway workers. Glad they were able to strike a deal, and we can wipe that one off of our list of things to worry about today. Now, initial jobless claims, that also came out today. This is jobless claims for last week. Initial jobless claims came in at 213,000 for last week. This was 5,000 below what was expected, and continuing claims actually rose by about 2,000. Again, this was better than expected, lower than what was expected. So jobs market still staying, week over week, still staying kind of tight. And the 4-week moving average for the initial jobless claims, well, that's been going down for the last few weeks. So again, jobs market staying kind of tight. Retail sales data, that came out today. Retail sales data came out and showed that retail sales for August increased by 0.3%. The forecast, what was expected, was a decrease, a negative 0.1%. So it came in hotter than what was expected. But the headline doesn't really tell the entire story. If you kind of dig into the data on the retail sales today, and you pull out one section, autos, well, instead of a 0.3% gain, it's 0.3% decline. And the reason why, it's not because there was a higher volume of auto sales in August. It's because new car prices are up 10%. It's an inflationary factor that's being reported in this headline data through auto sales. So kind of an interesting fact there. If you take a look at the core retail sales, this strips out autos, gasoline, food services, and building materials. Well, that came in month over month flat, which was lower than the 0.5% expected gain. So retail sales, the headline data doesn't quite tell the whole story. You got to dig in and take a look at what's going on in retail sales. And lastly, the news of the day was the Philly Fed Business Index. In the past, this has been a market mover. This is an index put together by the Philadelphia Federal Reserve Bank. And it's an index about comprising of regional businesses in the Philadelphia area. This month, that Philly Fed Business Index, it's for September, so it's a real-time business index. Well, it came in at negative 9.9, which was much, much lower than the expected. It was expected around 2.8, somewhere around there. And the previous report, well, that was around 6.8. So, the Philly Fed Business Index coming in much lower than what was expected. And so we just have, today on the data, we just have this mixed messaging on all of the data today. We've got better jobless claim data than what was expected, better retail sales than what was expected on the headline data. The Philly Fed Business Index is worse than what was expected. So, what does it all mean? What does this mixed messaging mean? How is it affecting the markets? Well, bottom line is that it's not doing anything. The data for today and the data this week has not done anything to avert really the downward trend that mortgage bonds have been on since the beginning of August. We've been in a very solid channel, downward trend on the mortgage bond. And, conversely, mortgage rates, well, they've been in a solid upward trend. Mortgage rates, the national average for the 30-year fixed yesterday came in at about 6.3%. Today, we're expecting that to be at around 6.45%, somewhere around there. Mortgage bonds today, they're down 39 basis points at the time of recording. The 10-year yield is up 5 basis points. So again, everything is kind of staying in that same trend line channel that it's been in for the past, really about the past month, since the beginning of August, month and a half since the beginning of August. Now that's all the news that we have for today. Tomorrow there is a couple of more news items, but they're not as big market movers. There's a 1-year and a 5-year inflation outlook and a consumer sentiment report that's due out tomorrow. But again, those things don't typically have a huge effect on the market. Most of the news for today for this week is out of the way today. But remember, stay positive and focus on the things that you can control. Focus is a choice. Positivity is a choice. So stay positive. Have a great day, and we'll see you tomorrow.